Okay, I'm back. Can you folks hear me now? Okay, good, good. Yeah, I just had to relaunch. It's called an encoder, and it wasn't taking in the sound, so I just rebooted it, and good to hear. Hey, Kat, good morning to you. All right, let's go to the futures now that we killed 5 minutes. Sorry about that, folks. How's the quality of the audio? This is a brand new mic. It worked well on Sunday night. I think it was the old mic that was causing the horrible. Good to hear, Sam. Thank you. Horrible audio quality that folks had to listen to. I really apologize. Okay, and that mic was fairly new. It was only like 6 months old. My prior one, which is the same brand, I had for like 4 years. All right, let's begin with the dollar. The dollar yesterday made this is a daily chart. The dollar made a new weekly low last week. And this morning, we're bouncing off of support. And that's causing some trouble for the markets. Now, when I see a new weekly low on a currency, on an index, on a stock, the probability of a closing low on the week is pretty good. There's always the chance that you run the risk of an outside reversal week, a bullish engulfing week, but the probability of a down week is certainly greater, especially when you have that particular issue that has been in a downtrend, as the dollar has been. This is a weekly chart for quite some time. So at current, I'm still going to give the odds to bears, but it's almost 50-50 right now, because what concerns me about this chart, when you go back to the weekly chart, is this week here. We had a strong week. This is the week of the 21st of September. We broke out. We pulled back. We have a little more than a 50% retracement at current. And now we are bouncing off of a support level. And I didn't even draw this week. This is one I put on there a couple of weeks ago. And you can see how it's respecting it. Now, what does that mean for the markets? Well, for gold and silver, it's not good. For industrials, meaning exporters, U.S. exporters, it's not good, because the price of goods become cheaper when the U.S. dollar is weaker overseas. So we'll be watching this very, very closely today to see whether or not we gain traction or do we fail. Now, I'll tell you, I already took a peek at oil. And oil is not acting negatively. It's actually up on the session. It had a good day, very good day yesterday. Not a good day, very good day yesterday. And it's up again today. And you could take a look at, hey, Larry. Bob, I think you were smart to stalk the energy sector. We must be close to a bottom on Exxon. Yeah, I think so, Larry. I think I don't expect a V-shaped recovery on Exxon. I think that we're going to get backing and filling, as we would with most plays that have been in a long-term bear market. I think I mentioned last night on Market Wrap that we were looking for and hopefully get a W formation, a higher low on Exxon. And all the while, it's paying us over the 10% dividend. So that's okay with me. And if we are right and the shares do take off, if they go up to 40 and $50 a share, and that dividend, for new buyers is back down to, the 7s or 6s, we'll feel great getting paid 9s and 10s on where we bought it. So to me, longer term, that's the real charm, is seeing the asset appreciation move up higher, and you're still getting paid that dividend that you initially invested into at lower prices. So let's take a look at nat gas. Nat gas is up higher, up over 2.25%. Did I hear about the new Chinese coin? No. What, is it supposed to be the next best thing? I don't follow the crypto world all that much, and I really should. I just don't know who the up what's the word I'm looking for? Not upstart. Who's going to be the next Bitcoin? I'm trying to figure that out, but there's so much, quote unquote science behind it. I just don't understand it, to be honest with you. I just like to keep it simple. I like Bitcoin. It's very liquid, and those other ones, I don't know how liquid they are. Let's go to the Russell 2000, which broke out. And not just liquid, viable. I think that's a better word, viable. There is liquidity out there for Ethereum and the other ones, XRP. Russell 2000, great week so far. We are down slightly on the session. I think that we're going to shrug this off today. We had a very strong session yesterday on the overall market. The only thing missing was volume, which is important. I'm not dismissing volume at all. You will want to see institutional demand. And frankly, you didn't see all that much of it yesterday. The S&P 500 up spot 2.1%. We're off the lows of the session. It's still a healthy chart. Higher lows, higher highs, no divergences to speak of. We're holding support on RSI. The Nasdaq 100. We broke out yesterday. We're retesting here, and this must hold. And I couldn't update this for whatever reason yesterday, this line. And it won't let me do it again today. I want to turn it green. Won't let me do it. Strange. Well, let me do this line. Yeah, edit properties. There we go, finally. Didn't take. All right, let's give it up on that. I'll become obsessive about it. All right, so Nasdaq 100 broke out, retesting support. We want to see RSI hook back up. No breakdown yet. So we're still optimistic here about the markets. In particular, the industrial names. The Dow Transports made a big move up higher. I keep talking about this, and I keep saying there's something going on. Is it the fact that we're seeing the U.S. economy open up? Are the talking heads in the news with this coronavirus and the spike ups full of crap? To a certain extent, I think, yeah. For all intents and purposes, seeing all the spikes in the red states, in the blue states, where there's supposed to be so much, it's supposed to be on the Dow. Precautions being taken. Here's the Dow Transports. I want to remind everybody where we closed out last quarter and what we're doing this quarter. We broke out. We're retesting this quarter, and we're holding the breakout point. And we are now at the highs of the quarter. Granted, we're only a couple of days into it, but still, great price action on the transports. They're telling us a story. And when you drill down to yesterday's price action, we broke out. RSI validated. The only thing missing, volume. And when you take a look at energy, energy yesterday outperformed pretty much every major index out there by 3%. Yes, we're coming off of a quote-unquote oversold level. And this is what I mentioned with regard to... Hey, good morning, Trisha. Anton, good morning. Yeah, it's really live, man. We don't fool around here. Welcome aboard, my friend. What we're looking for here on energy, ideally, and this is what I referenced earlier to Larry, or in the chat boxes, Jedi. We're looking for a continuation move higher on energy. What I think is going to happen here is in green, we have the declining 20-period moving average. We're going to rally up and into it. Perhaps we'll even overshoot. But then we'll probably pull back. And what we'll be looking for is a higher low or a retest of support on the energy sector. Now, we have a large position in ExxonMobil. So I don't know how much more I want to put on a retest. I'd rather buy the breakout and add more there. So I think we'll pull back, stall at the 20-period moving average, pull back, higher low, and then once we rally up and through the pivot point, the center of the W formation, and in particular, up and through the then flattening out 20-period moving average, I think it's going to be game on for energy, at least for the short term, until the weekly charts begin to put in higher lows. And you may argue right now that we're already seeing that. Let's go to my energy. Oh, wrong chart. Because here's what's influencing our trade right now. We have a huge triangle formation on energy. We tapped the lower band of support. Obviously, this is just pivot touch point number one from the lows of March. Do we know if this is going to hold? We're not sure. I think so. I think it's going to hold. But once we break out and above this upper band of resistance, we start to build the right side of this W formation and the higher low, it's going to be game on for energy, especially if you see a continuation breakout on the transports. There's something going on out there. Now, if you take a look, and I think I'm going to go over this on Thursday night, we're going to do a deep dive into the Biden tax plan. And if you want to see where the new tax income from the government is going to go, it's not going into energy. It's not going into the transportation sector. It's not going into the private sector. It's going into the already broken healthcare system, which they want to try to fix, at least on the government side. And they want to put money into the education system, which is clearly, as noted by the morons rioting out in the streets, is broken. So they're not putting the money, any capital, to work in the private sector where it should be. They're not going to offer tax credits. They're going to take money, and it's going to go off into the government, and we are all screwed 6 ways from Sunday. So don't want to get political here, but we have a clear difference of opinion. You see Biden get into office, or the Dems take the House and Senate, you're going to see energy get knocked over the head with a brick. So be very, very careful here about energy. Anything with a carbon emission is dead in a Democratic administration. So be careful. I will not be long of energy if we see a flip in Washington. And that's not politics. That is reality. Trucking index. Take a look at what trucking's doing. Again, this goes into the transports. We are seeing a major reversal on the month so far, and it looks as though we want to go higher. If the economy's so bad, why is trucking ripping through the ceiling? I think what we're sniffing out here is a recovery. Let's check out Carnival Cruise Lines. We're looking at these beaten down cyclical names for opportunity. Nothing going on over at Carnival. Let's check out the airline index. Go with the weekly chart first. Not wonderful. The airlines clearly underperformed yesterday. I was hoping to see better. We did manage to recapture support last week. In particular, we saw good price action on the second. No real follow-through yesterday. We may get it today. But you like to see these names come back to life. All right, let's go to some chart requests. I went off into a tirade today, so my apologies. I'm getting election fever, and it's causing a little bit of duress because you really need to be positioned appropriately, or at least hedged. All right, let's see what we got here. Larry Hogg. That's an interesting one. I haven't taken a look at Harley Davidson in a long, long time. Wow, look at this. This speaks to consumer discretionary, which had a very, very good day yesterday. Okay. So a monthly chart, we gave up support. Actually, I shouldn't say we gave up support. We failed to hold the breakout last week. We are back above resistance this month. So we failed here. Right now, we don't know whether or not we're going to hold. Way too early in the month. However, that doesn't mean we shouldn't ignore the breakout here. We'll just drill down to a weekly chart and see how we're holding up. Somebody just downgraded this. Who did it? Well, that was back in July. Okay. I love seeing downgrades and the price goes the opposite direction. That's a contrarian indicator. All right, so we popped up higher this week. No real stiff volume until you get up to $34 per share. I'm sorry, is that right? Yeah, $34 per share. I can hardly read that font. Is this a buy? I wouldn't buy it right now. Too much resistance above. We closed right at it yesterday. Daily chart. Yeah, we closed right at resistance, Larry. I think that it's plausible and highly likely that we're going to get a pullback and a retest this breakout point. I think that's the best risk reward entry point. You're in the very, very early stage of a potential recovery here. We don't know whether or not this is going to be a bear market rally or not. So we're going to say early stage recovery. And we want to be very, very careful with our entry points. And we want to stay small, very, very small. Nibble, nibble, nibble. We're in a commission-free world. It doesn't cost us anything to be patient now, except for the potential for opportunity loss if it gaps up. And I don't think that's going to happen here. Hog. And you may get that pullback as soon as today, given the weakness in the market. That's how I would play this. If we close above this resistance level, that's okay. I would buy on a retest because you have a lot of resistance up here. Let's bring in our automated trend lines. They did pick up an automated support level here, which is pretty cool. I'll share this chart with you so that we have the support levels. This note's just telling me that there's a lower support level that I prefer better. And heck, I want to get notified if we break down through it as well. Let's overlay some weekly. Yeah, no weekly support and resistance level locally. If we rally, there's a very good chance we head up here. To around $28 a share. A little higher than that. Yeah, I think that's a reasonable. Now I have my monthly overlays here. I think it's a reasonable expectation that we pull back to support one or both of these support levels, nibble, nibble, then buy more on a breakout. Very early stage recovery here. I would be very, very deliberate with my adding. No rush at all. Cat, it is recovery. Is it recovery or Fed pumping up the markets till the election? If we use the 1994 method of calculating unemployment, it would be at 28%, but after November, fair value. It's a good question, and you can't discount the influence that the Fed is having on the markets. The one thing I would argue, Kat, is that I always start my market wraps off with a look at the 10-year yield. And look at the gap up that we saw yesterday. You would think that if you had Fed intervention and they were priming the pump, that you would see yields get pushed down lower. They didn't. They've been breaking out. We've been watching this chart in particular for a few weeks now. And I get your point, and believe me, I'm with you. I'm torn. Then that's why I keep saying I'm not definitive on any one individual thesis on why this market's moving up higher. I'm just saying there's something going on here, and I'm being open-minded. So I don't want to be closed-minded and just stamp my feet and go, it's all Fed, it's all Fed, it's all Fed. There's no opportunity here. The sky is falling. I want to, and there's, I could make that argument that that's what we should expect. But the bond market, which is the tail that wags the stock market dog, it's telling us a different story. Yields are moving up higher. Bonds are being sold, not bought. So I want to keep an open mind. The bond market's telling us a story, and the stock market is reacting favorably to rising yields. And that's a good thing. That tells me that there's some sort of growth out there underlying, and nobody's really talking about it yet. And it won't hit the financial news media until it smacks them right in the face. So the charts are telling us one thing, the narrative is another. The narrative right now is that it's all pump priming, and they could be right. I'm not dismissing them. And I would still argue that this is all about priming, but it's becoming less and less of my argument as I see the bond yield begin to tick up and the stock market begin to follow suit. Now, if the stock market was rallying on Fed intervention and bond yields dropping, I would be all in on your argument, no doubt about it. So as long as we see bond yields press up higher and the stock market move higher, there's something going on out there. And watch the Dow transports. That is the key. And watch industrial metals. What did we see rally yesterday? Take a look at Boeing. We own all these names for disclosure purposes. Boeing, a very good day yesterday. This is a weekly chart, but we're very close to a weekly breakout. Here's a daily chart. RSI moving up higher. Stokes moving up higher. We're very close to breaking out here on Boeing. This is obviously a major, major industrial. Very close to a breakout. I think we're going up higher. Check out ExxonMobil. ExxonMobil outperformed the Qs yesterday. Now, granted, coming off of oversold levels, could be a short covering rally. Sure, I'm with you on that. But energy overall did well yesterday. Take a look at, what was the other one? I just drew a blank. Where's my positions? I'm going into my positions right now. What was the other one I wanted to talk about? Oh, U.S. Steel. The U.S. Steel. Of all names, U.S. Steel. Here, let's bring up the annotated view so you get a good feel of what happened yesterday. We sold U.S. Steel up at the 9s a couple of weeks ago. We bought it back. I think last week we bought it all back plus some. Look at the breakout last week, yesterday. Yes, it faded on the day, but a good day nonetheless due to the fact that we closed above resistance. And lastly, you want to take a look at the two major indexes that I watch in an early stage recovery, the banks. Let's go with the XLF. The banks are moving up higher. They've been weak. They haven't broken out yet, but they're very, very close to a breakout. RSI, very close to a breakout. Price, looking good. Not loving the 50-period moving average, which is declining. But I think that if yields push up higher, so are the banks. The other thing you need to keep an eye on, the small caps. These are early stage recovery plays here, small caps. And I can't believe I'm using the word recovery. Thus far this week, we have a breakout on a weekly basis. Do we close there? I don't know. We could close negative for all I know. We want to keep an open mind. So the markets are moving up with rising yields. That speaks to me as being organic growth in the economy. But yes, we're not going to dismiss the influence of the Federal Reserve. Never, never, never. All right, I don't think I have any other symbols to go over. If anybody has anything else to go over, I'll be more than happy to do it. We're a little bit over here. I'll take a couple symbols. ZM. Let's take a look at it. First, let's see how it's doing in the pre-market. Closed at 485. Down slightly. Monthly chart, no new high. Inside month thus far. It's good that we opened up inside of this wick from the prior month. That's usually a good thing. No matter what time frame you're trading. Once you have a big wick and you gap up the next candle inside that wick, it's usually good stuff. Weekly chart. So we got overbought last week, rallying up and into the third standard deviation Bollinger Band. We're pulling back. The 479 mark really needs to hold. It held last week. We closed just above it. This week we retested it yet again. So you mentioned the 20 period moving average, which is good, but if you take a look at this line here, this is the volume weighted moving average. Let's take the Bollinger Bands off. And what it's doing, it's connecting the prior lows. Let's take this off. And now we just have VWAP. And you can see that it's even closer to the current support level than where the 20 period moving average is. So I like it. I think this could be bought. And you want to use a stop below the 20 period moving average or VWAP, which are both rising. That's okay. Or above 479 a share. Actually, I would bring that down. 478 per share. I'd be fine with that. Then look to add on a breakout above resistance. Loving the Stokes. Higher lows here. Looking very, very good. I don't think there's much in terms of, not much in terms of seasonality. So no sense talking about that. I like it, Cat. I think it's probably going to move up higher. I think it'll be bought here. And stop loss right at 478. Buy more on a breakout above resistance. And with that, folks, I'm going to say everybody have a very profitable day. Thanks for joining in. And join us Thursday night for Thursday Night Futures Live. There's a link below. You're welcome, Kat. There's a link below. Enter your email address to get added to our alert list 15 minutes prior to us going live. And what else? Oh, smash the like button. Follow me on YouTube. And everybody have a great day. Be well. And leave a comment. I don't get any comments. Be well.